Hey guys, welcome back to the channel, your number one source for income-oriented investing. It is a 1 a.m. On a Wednesday. Well, I guess it's Thursday, and I wanted to make another impromptu video just like I did for RA because I've been getting a lot of questions, comments, emails about the recent drop in certain split funds. So, of course, there's DGS, there's DFN now. FTN and GDV are also going down fairly hard. So I've been getting questions. I'm sure some of you are worried, especially if you're newer to the game, to the split fund game. That hasn't experienced this before. So I figure I'll make a quick impromptu video. No editing, no nothing. And I apologize in advance. It's probably going to have really bad transitions and everything because I want to get it out as soon as possible. Hopefully it should come out. I'll publish it tomorrow. So I wanted to try to answer the question that I've been seeing a lot. Why? Right? Why is FTN going down really hard? It's going down like 3, 4, 5% in a day. Why is GDV going down? Same type of story with DFN and DGS for the last little while. So I'm going to try to give you what I think are really the three factors that are impacting a split share fund's share price. Okay, so of course this is my opinion, but I think I have enough experience in the split fund game to understand why they move up and down. So factor number one is a very important factor, and it's a no-brainer, but these are going to be good reminders. If you're a veteran, I know this is going to be boring for you, maybe some good reminders, but this is more for you newer investors if you decided to invest in split share funds. I'm talking about class A shares, of course, not the preferred share. So reason number one, why does the share price go up and down for the split fund? Well, like every other share price, like any other ETF, it's the holdings, right? What's inside of it, guys. So very important, right? FTN going down pretty hard, while FTN is all financial companies, US and Canada, which are having a bad time. So obviously FTN is going to go down, right? FTN is just the middleman, GDV is just the middleman, DFN, etc. It's really the basket of stocks that you're really investing in. So that's definitely a humongous factor. That is factor number one. Factor number two, also very important, is the leverage. Okay, you guys need to remember that split share fund class A shares are highly leveraged, right? So leverage means they're going to go down hard when the stocks go down inside the portfolio. It's going to go down a lot harder than an ETF or a fund that's not leveraged. But the same thing is true when they start going up. They go up quick. That's why you could see these big moves, right? DGS, I think Friday was up like 6 or 7%. Now it's down 4%. So they could go up and down very quickly because they are leveraged. And one positive thing I have to mention about split share funds is that it's synthetic leverage, right? It's against the preferred shares. It's not like they're borrowing money, which means that the leverage costs do not go up when interest rates go up. So unlike covered call leverage ETFs, when interest rates go up, that does the leverage costs more, but not the split share fund. So that's actually something to keep in mind. Except when it comes, another thing to remember, the level of leverage in a split share fund is very hard to determine the actual percentage because it's based on, the proportion of class A shares versus the preferred shares. But I will tell you that the lower the class A shares go, the bigger the leverage effect. So it's much more than 25% leverage, 50%. I think it's like probably in the 100% range here. It's very, very high leverage. So that's why you could see a lot of volatility. That's factor number two. Very important. Factor number three, also very important, is human behavior, right? So the stock price is one thing. The net asset value, or what it's actually worth, is a complete different thing, right? So because these are closed-end funds, don't forget, split share funds are closed-end funds. There's a set number of shares. The stock price really is going up and down based on buying and selling. And obviously now, when there's potential for dividend misses because we're going closer to that $15 unit NAV, like DGS and DFN, right now we're under $15, you will see people for sure panic, and maybe not out of fear. Some people panic out of fear because they see that the dividend's not coming in anymore, and maybe they didn't understand or didn't review this aspect of a split share fund beforehand. They didn't even know that at unit NAV under $15 there's no dividend. Or it could be annoyance as well. You're just sick and tired of waiting, and people end up selling. They end up selling at a loss, which drives down the price, of course, right? If there's more selling than buying, the price is going to go down. So these are really the three factors. You really have the holdings, the leverage, which is very high with these, and the human behavior, right? The fear, the missing dividends typically panics people, especially the newer investors who didn't know what they were getting themselves into, didn't understand the split share funds beforehand, tend to maybe panic sell. So now that we've covered that, hopefully that answers the question of why they're going down. Let me give you some tips to really reassure you, and as a split fund investor, as a veteran, really what I think you should focus on instead of just looking at stock charts all day, right? So number one, very important here, is remember what you are investing in. So sorry about the bad transition. Remember what you're investing in, okay? You got to look beyond the stock symbol, beyond the ticker. So DFN, you're investing in these 15 companies. These are very high quality companies. That is what you're really, really investing in. FTN, you got 15 big cap blue chip companies. Yes, it's all financials. It's not diversified, but this is really what you're investing in, etc., etc. Okay, guys, so remember, same thing for GDV, DGS. You could check out the holdings. This is all high quality stocks here. You got to remember that is what you're investing in, okay? That's very, very important. That's tip number one. Tip number two is to really ignore the stock price, because the net asset value, or the NAV, is all that matters. Let me put it this way. The net asset value, or the NAV price, is what one share is actually worth. The stock price is what people think one share is worth, right? So it's very important to understand the difference. So when it comes to split share funds and closed-end funds in general here, you guys have to remember that the NAV is all that counts. And Quadravest just updated their website, so we actually do have the NAVs as of August 31st. Okay, so you see here that DFN's unit NAV, this is the unit NAV, so Class A shares and preferred shares together. Let's take out $10 because preferred shares are typically around $10. So the NAV, the actual worth of DFN right now, is about $4.64 approximately as of August 31st. $4.64. It's trading for $4.75. So the stock should actually be $4.64. So this is why whenever I see the question, why is this split fund going down? Well, the first thing you got to do is, what is the NAV? What is the stock price? So DFN stock price is actually too high. It actually should be lower. FTN, 650, right? 1650 minus 10 is 650. It's trading for 719, still at a premium. So FTN should technically be 650. You're asking why? Well, this is people buying and selling dictates the price. And typically what happens is when there's more fear in the market, the price is going to start going down. This could cause a chain effect, and the actual stock price typically gets closer and closer to the actual value. I call it reality. Reality is actually starting to set in here. And sometimes when we're lucky, it's very rare, but it does happen. When there's too much fear, the NAV is actually higher, like with DGS, than the stock price. So now we're talking about it, getting it at a discount, because you're buying DGS right now. You could buy DGS for about 443. It went down 4.5%. 443, but as of August 31st, so I'm assuming it's more or less very close, it's worth 481. So DGS stock price should technically be 481. Right now it's 443. It's trading under its intrinsic value. So now it's actually a phenomenal time to actually pick up DGS. And this is where opportunistic investors come in. This is where veteran split share fund investors come in. And I got private message from a lot of them, guys. I just bought 10,000 shares of DFN at $5 or whatever, right? So people know that they're gonna go up very, very hard because they're leveraged. And once, you know, the Canadian banks go back up, DFN is gonna go back up. Or when the financials go up, FTN is gonna go back up. So as a veteran, you know, this is a very exciting time. So what I'm trying to tell you is you always got to look at the NAV. That's all that matters, not the stock price. The stock price could disconnect from reality. It typically does. GDV is the same thing, right? Right now, 840, it's been going down and down a couple of percent. It's been down 8.44% in only 5 days. But when I look at the actual intrinsic value, the net asset value, it's in the high sevens, low eights for a really long time. It's been the same. So the actual value of GDV is not really changing. It's the stock price that's changing. It's the perception of people that have on GDV that's changing. So if everything would be perfectly fine, GDV's stock price should actually be 790, not 846. So it actually should be lower. So very, very important, guys. The NAV is all that matters, not the stock price. Okay, very, very important. Let me get back on camera here. Another thing is the $15 unit NAV rule. So split share funds have a rule where there will be no distribution for any Class A shares. If the unit NAV is under $15, that's really to protect the Class A shares for the long term. Because, you know, let's say they stop giving out the dividend like DGS or DFN now. That doesn't impact the net asset value at all. In fact, it actually helps to increase it back faster because they're still writing covered calls on the portfolio. The holdings are still going to capture the ups and downs of the stocks, except now that 10 cents a month of NAV that they've been giving out is not given out anymore. So it helps to grow the fund quicker, but it could take time, right? It's only 10 cents a month, but they're still writing covered calls. They're still collecting the dividends. The capital appreciation is going to happen when the stocks go up. So that's still going on, right? And remember that there's a big leverage effect the lower they go, right? So all the capital appreciation, all the covered call income, that all goes to the Class A shares. That's why there's a lot of volatility with them. Another tip I will tell you guys, trust me, this comes from experience. I would not sell at a loss now. Do not panic sell. Remember, these are quality holdings. Go look at the split funds you have. Go look at the portfolio, the stocks on the websites. You're still investing in quality stocks. Do not sell at a loss. You will regret it. Trust me. Especially in a registered account, a TFSA and RSP, where you can't do anything with the losses. If you're really, really annoyed and fed up, you really want to sell, it's in a cash account, a non-registered. It's not so bad because you could carry forward losses forever. If you're an income investor like me, you get a lot of capital gains income, which of course you could offset. So please do not sell at a loss. Trust me, you will regret it. Look at this as a learning experience, I would say, everyone, if you're newer to split funds. But trust me, as a veteran, I can tell you it happened before and it will happen again. This always happens near, you know, that $15 unit NAV or when the Class A shares are close to not paying or stop paying, people typically sell off. It's actually, by the way, a great opportunity. It's literally the best time to buy the split funds and it's the worst time to sell them. I'm just being honest here. So look at it as a lesson, and I would hang on, and then you could make modifications to your portfolio later. You'll learn your lessons, and maybe you have too many split funds in your portfolio. Maybe you will trim it, maybe you'll keep some and you'll get rid of others. So these are all little modifications that you could do later on, or you could do once you go through this learning experience. And I'll give you a perfect example when I say it's the best time to buy them and the worst time to sell them. I went through this experience myself with LBS. So LBS was at one point like $2.50 or $3 back in 2020, and I picked up quite a bit of shares, and that lowered my LBS book price significantly. And yes, I missed 5 or 6 or 7 dividends in a row in 2020. But when LBS started paying again, my yield was really, really high, and I had a big capital gain on it, right? Because I bought so many cheap shares. And then when I sold LBS, like many of you already probably know, I made a big capital gain. I made a big profit on it. So I'm telling you, I'm getting messages from veterans that are just snatching up all kinds of DFN, all kinds of DGS. I myself might buy more FTN. I'm thinking of maybe some DGS. So it's really, you got to figure out what's best for your portfolio, learn the lessons. And because now we have so many great alternatives, in case you don't want to go through this anymore, you could modify your portfolio accordingly. But just don't panic sell it because you're seeing it go down every day. Remember, all that matters is really the net asset value. That's probably the biggest tip I could give you. Stop focusing on the stock price. Look at the net asset value. That is really what counts and what is the true value of one share. The stock price is just what people think it is. So you should ignore that. So I hope this video was helpful for you. Give me a thumbs up if it was. Do you appreciate these impromptu videos? I figure instead of playing Diablo 4 for an hour, let me just make a quick video to help maybe appease or calm the nerves that you might have if you're a bit newer to income investing, you're a bit newer to split funds. Remember, I have a lot of videos on split funds, including a Q&A with Michelle from Brompton where we discuss split funds at length. I have a 1-hour video explaining split funds. I have a dedicated playlist to all my videos related to split share funds. So make sure to check out my playlist if you want to learn more on them. And yeah, see you next time.